Hey guys, happy to be here. My name is Maria Stankevich. I'm Chief Business Development Officer at EXMO.com. And let me share my screen. So, a second. Into full screen, yeah. So today I'll tell you about new crypto habits and how different user segments actually react to the current market situation. Well, since the beginning, since 2009, Bitcoin and cryptocurrency markets have seen already many cycles of up and down. And even with the larger ongoing trends known as the bull run and the bear run, sometimes it's very difficult actually to feel patient, and it can be quite stressful and hard to navigate even for experienced traders. What can we say about beginners? It's even worse for them. So this is quite a familiar, I think, quite a familiar meme that you can see on the slides. So this is also quite a familiar image, right? Well, savvy investors, they know the time to hold and lose is when the price of an asset is much lower than the fundamentals suggest it should be. But all too often, the individuals, the traders, decide to cut their losses and succumb to selling low. Selling low, like buying high, can also be driven by crisis psychology, as well as by fear and anxiety surrounding financial loss. So this is what we see on the image on this meme, 69, and there is a queue, and 31, there is nobody, which always fascinated me a lot because we are in crypto exchange, and we definitely see the decline in deposits at the moment. While when the BTC was 69, well, it was crazy. It was like all going nuts. So basically, individuals who are selling at a loss, they are impacted by so-called loss aversion. What is loss aversion? Loss aversion is a behavioral bias in which individuals tend to experience more emotional pain from a loss than actually emotional pleasure that they may feel from their equivalent gain. So it's actually a psychology term. And in order to avoid emotional discomfort and financial loss, they can impulsively sell their assets at a loss in order to avoid further detriment. I think everybody experienced this at some point when you just don't see the end of the tunnel, don't see the light in the end of the tunnel, and you just decide to sell it. So now you know the term actually. Also, FOMO, probably like the experienced traders, they must know that FOMO, or fear of missing out, leads to impulsivity and lack of long-term perspective, trading without giving much thought of consideration. This is what we see when the BTC is 69. We have the saying in the trading environment: if your granny asks about Bitcoin, it's actually time to sell, not to buy, because the market is overheated and it's gonna get down. So in such cases, speculation and emotions, they overtake strategy and fundamentals. Everybody experienced that because FOMO is driven by fear, overconfidence, jealousy, greed, impatience, and anxiety. So this is not a good thing to feel. So never, my advice, never try to avoid FOMO. And even if you start feeling that you're missing something out, believe me, you're not, because we all seen the different up and downs through all these years. So don't be afraid. Also, by the way, what I would suggest, when you feel FOMO, try to avoid news and newspapers and any news sources that are actually driving you, that are actually winding you up to buy BTC or any other asset when it's really high. Now let's look at different kind of investors. This is a CoinShares report, which I really like. This is a recent one. So I think it's May. So we can see on this graph that digital asset investment products, so outflows totaling America, totally in 141 American dollars. That was last week. So basically it was like 3 weeks ago. And this is normal, right? So we see that cryptocurrency is down, BTC is down, so the outflow is like normal. So you can also see here that total asset under management, $38 billion, and it's their lowest point since July 2012. I'm sorry, 2021. So it's like the lowest point. So this is also quite normal when the market is going down. But I'd like to like draw your attention to the multi-asset or multi-crypto investment products. I think like here you can see it like in details. So you can see that investment products they see the inflow totaling of $9.7 million 3 weeks ago, and inflows year to date represent 5.3%. So this is numbers that actually show us that you know, in the institutional investor environment, we can see that the situation is completely different. So despite the fact that BTC is down and crypto is down, the investors are still there trying to they're investing, they're very active, and despite its lowest point, we can still see different inflows, which is like very cool, and it shows us that we see that investors, they see multi-asset investment products as a safer relative to single line investment products, despite it's not even like their it's not only traditional markets, so they're trying to diversify their assets, and despite the market is down, we still can see inflows. So the price drop for them is an investment opportunity, and they use the method which is called buy the dip. Well, this is like a meme also. This is like a bit of satire here, which is like, you know, usually we think that we buy the dip, but then like, you know, it's an actual dip and then the dip of the dip. Well, that's a little bit like satire, but sometimes it's true, sometimes it's not. But like when the crypto, like you need to just remember when the crypto market is falling, there are plenty of opportunities if you know where to look. This is very important. So don't treat the decline, because, you know, I'm here at Money 2020 in Amsterdam at the moment, and I can hear like different discussions that the market is down and the BTC is down, and like, you know, big investors are selling their assets and they don't believe in BTC anymore, and the market is overheated. This is, well, this is bullshit because the market is, you know, we've seen it all. And if you look at their price chart of BTC, it's still, you know, it has the trend of growing. So we're going to see like a new high very soon. But at the moment, it's the dip. So it's your chance to buy the dip. And this is not an investment advice, of course. So my point is that the fact that where others see actually a dark and cold crypto winter, some investors actually see a new window of opportunity to get their favorite asset as on sale. So yeah, I think it's a great opportunity. So about buying the dip, what kind of term it is, and it's a popular way for the traders who felt priced out of the previous gains to get into the market. So if you don't have BTC at the moment or any other crypto, this is your chance actually to increase your position and get in. Even within a downtrend, there is still small peaks where you can actually make money. Well, traders that actually like have a very good skills of technical analysis can actually benefit there, because, you know, we also see that their Bitcoin is not flat, so it's like 28K, then it's 32K, and, you know, in between this gap you can actually make different positions. You can play shorts or you can play longs and still make money. You know, you just need to brush up your technical skills and you know, and try to predict these short-term movements and make money on that. Also, let's not forget about the shorting as a strategy. So, you know, you could choose any exchange, not only ours, but any where there is like margin trading, where you could actually borrow money to trade. So you can place an order, like, for example, you can borrow one BTC when BTC is 30. then sell it, then buy it, for example, when it's 28, and return this one BTC. So you'll be in profit for 2K. This is already something. So you can still make money on margin trading or shorts, placing shorts. Also, let's not forget about the activities like staking and DeFi yield farming. They can actually also help level out the returns and provide support to make sure that your actual crypto balance is always growing. So if you believe that an asset, and I believe that an asset like BTC will be eventually worth more, dollar cost averaging works. So this is basically like summarizing of the whole strategy. And in fact, you can actually get more crypto for your dollar during down cycles. So this is crucial. So we are definitely optimistic here. And, you know, when we were talking about their topic that I should cover during this conference, we were discussing that you know, what shall we prepare? And you know, I hear a lot of like pessimistic discussion around me. So guys, if you're one of them, don't worry, the cycle gonna, you know, get up again and you'll be profiting. So this is you know, I always used to say, and I always say that there is no time better to buy actually than during the current downtrends. So if you have any questions, here is my contacts.